Needed that quick confirmation that you guys could hear me. All right, so starting this week, right? We're going into holidays. I'm not going to lie to you guys. I won't be trading at all this week. I'm going to be looking into charts because I don't have a really busy holiday schedule this year, to be honest. More so later after Christmas, going to be meeting up a lot of family, but it's more so sad times for our family at this time of year this year. So just a little bit more chill. So I'm going to be spending some time on the charts, and we are going to have a price action review either tomorrow or the day after. Honestly, if tomorrow has some nice price actions, we're just going to have tomorrow, and then we'll meet again after the holidays. But if tomorrow's price action is ugly, we're going to have a PA review on Tuesday no matter what. So just going to give you guys one PA review this week, keep you guys busy. And if not, we're just going to move forward after the holidays. But for this week, we have a very nice gap just right away. And what did we do last week? Well, it's very simple. We created a huge gap lower, right? What does this tell us? Not even the size of the gap, to be honest. Just the fact that we formed a fair value gap last week. We displaced. In which direction? Lower. So if last week displaced lower, just like this is the same logic I use from session to session, from day to day. What do I tell you guys? After a large range day, we look for a retracement. Look at every single candle that had a larger range than their previous. Well, here, for example, here we just kept going. That is true. We have to bring in some news context. But in general, you'll see a large candle, you'll see a retracement on the next day. So what am I expecting this week? Well, a retracement. And to be honest, being the week of Christmas, I expect us to be trading between these two levels, right? Between previous week high and previous week low, especially after such a large week. We could see something crazy, right? We could see some really non-typical huge move once again. But the truth is, I anticipate that we'll leave this move for the new year. So this week, what do I anticipate? Consolidation. A little down, a little up, probably, well, not that bad if I'm trying to be representative. Just an inside bar, right, on the weekly. What is an inside bar? In case you don't have right statistics, you're not familiar with weekly profiles, I'm looking for a week that trades within the previous week. So these pretty much never happen on a weekly standpoint, but here we have a great example. For example, you see this candle, which is a week, and then the next week over traded between previous week high and previous week low, right? And actually almost the next week after as well. So that's what I'm looking for this week. I'm looking for us to trade within these levels, consolidate. Best case scenario, we invalidate this point so that when we start a new year, we know exactly what we're looking for. We're looking for our lower levels that we've been talking about for weeks, right? But we honestly do not have to. Overall, I'm going to expect consolidation. I'm not going to be looking to trade. Liquidity is very low at these times if you prefer volume. But all the big players, they have vacation too, guys, right? The algorithm runs on liquidity, and the liquidity is gone. Just like in summer, you look at any price action during the summer, it is slower than you'll see in September, October, November, our prime trading months, especially if you're a futures trader or a stocks trader. You notice this, and you, of course, have access to data that supports this. So what am I going to anticipate? Well, inside week, we're going to be trading within, we're going to form a lot of SMT, and it's going to be a lot of mean reversion trades. What is that? Well, you know what? Let's learn something today. So we see our high and low here. Okay, so this is a range. Any range, who cares, right? Really, just any single range, we're looking at this as a high and low. What we're looking for is consolidation within this range for us to take out one side, then go take out the other, and then we're going to reverse inside. The moves you're interested in here, I'll do something a little better. The moves you're interested in is after we take out this objective, let's return to a range. So you're going to use this new range that we created. So let's say, once again, I'll make this a little bit more representative just so it's a little better. You'd use this range that we're currently trading within, and you'd look for return to a discount. So in this case, my drawing just lines up beautifully. So let's use it. Why not? You'd be looking for a return to the discount, first discount, and efficiency. Once we take out the low here, you're looking for the same thing, just in this case in reverse. So you'd just be looking for retracement into your first premium and efficiency, right? I am not looking to trade expansions. I'm looking to trade reversions into a range, which means retracements into a range after consolidation, right? So that's what I expect in low liquidity and low volume conditions. This is what I anticipate to see the markets do. I anticipate them to induce highs and lows. For example, go take out this high and then look to retrace right away, right? So take out this high, have a large retracement lower. Afterwards, do we retrace or do we continue higher or retrace lower? I don't care. In low liquidity, low volume conditions, I'm not interested in trading that following move. I'm not interested in trading expansion. I'm interested in waiting for the next level to be taken to then trade once again the mean reversion of the most recent expansion range, right? So looking more so for after our objective is met, we're going to retrace rather than looking to target a specific objective, which, by the way, what I just explained right now is how I never get stuck in consolidation. You notice this from my PA reviews if you're just a recurring viewer, right? Anytime I do a PA review where we had consolidation, I always say, well, no, I didn't get stuck in that. Or sometimes I do get stopped out once, very rarely twice. That would be a mistake. But sometimes it happens, right? I do make mistakes. I'm human. But just in general, when there is consolidation, I'm not looking for expansion trades. Because when you look to trade an expansion, you're just going to get stopped out every time, right? You have a consolidation that forms. Well, all of these highs and lows would have been opportunities. So maybe when we broke out above these, you thought, okay, well, now I can look for a long setup after this retracement. And then you got stopped out on that move, for example, right? Let's just have a 2-to-1 just to have a nice visual representation. Got stopped out on this move. Then you're like, oh, well, okay, I should have been short. And now you're trying to short this after, once again, a retracement. But then now you go higher. How do you choose when it breaks out? I always refer to time, but in low liquidity conditions, I'm not going to refer to the day of the week or the session that we're currently within because we are in low liquidity conditions. The algorithm is going to run when the liquidity is present, so it's not going to use its specific time. So how do I filter through all those bullshit? Well, instead of trading these expansion moves, I'm just going to look at, hey, we broke out. I'm going to take a short. Let's just say here, I'll give another example here, like this. I'll look for a retracement, right? And if we take out the low, once again, right? Pure search and destroy conditions, which happens in high resistance, low liquidity environments. And like here, you have another one. And then you'll catch that breakout most of the time if you have a runner. But even if you don't, you manage to get 2 wins within this consolidation. This is where also standard deviations come in. So, by the way, in case you didn't notice, very much more of an educational outlook this time. But I hope you guys enjoy the format nonetheless. If I just bring my standard deviations here, right? Why do I have these levels? Well, I have -1. Why is this level a different color? Because that is a very high probability objective. Bread and butter, ICT likes to call it, right? I've tested through data. This is my high probability objective, which means even when I'm wrong, we're going to hit this. And there's also, we can go deeper, but the truth is 2025 standard deviations analysis on the Rise Statistics app is going to bring everything I need. So I don't want to hint at it too early. But -1 important level, 2 to 2.5, what is that? That's my reversal range, right? So I'm looking for price to reverse and at least start a retracement, right, at this time. So it doesn't have to be a complete reversal, but it can be a reversion, right? A return to a certain level, a certain point. So what am I going to be looking for? Well, very simple. We consolidate. I understand we are within consolidation. Let's just say you had a big range formed there. I'm going to look for expansions to 2.5. And then what am I going to do? Well, let's just say I do something kind of proportional. I'm going to do the same exact thing. I'm going to look at my breaker block standard deviations, look for us to reach that reversal zone. And once we are there, what am I going to do? Trade the opposite direction. Once again, I just flip the sort of moves that I'm interested in these conditions. I just noticed I was rewatching some videos, right? I'm always looking to improve the content that I bring to you guys. So I rewatch some of the content I post. That way I can improve and bring you guys some more valuable content every single day. But I was looking at this and I noticed that I never speak about this because the truth is it's always easier to just not take part in the markets, right? In those times. It's always going to be the easiest choice, the safest bet. But you guys requested, I don't know if you've been here a while, but I ran a poll, right, a few weeks ago, and you guys wanted more detailed outlooks. And that's how I engage with price when I don't see a nice expansion move. I look for mean reversions to specific levels, more specifically opening prices, which of course you guys already know it if you've been here for a little bit. I'm on my 15-minute chart and I have my key times indicators, right? Those are the levels I look at specifically. I do, of course, run some custom levels on them. These are the preset. I like to use PM open, right? 1:30 p.m. when I'm trading the PM. 2 a.m. open is a big one as well for me. That is my London kill zone open. And when I expect a reversal, I'm going to use this level to gauge premium and discount. So see, there's a lot of things we can discuss about, but the truth is this week is not going to be high probability. So no matter what we discuss about, what trading ideas, they're not going to be high probability, which doesn't mean they won't work, which doesn't mean you can't make money or trade profitably in a week like this. It just means it's harder. And being in the trading world, I don't know about you guys, but it's hard enough already. I'm very happy with just taking some time off trading. As I said, I'll still be charting this week, but not trading, not having that additional stress of managing risk. Pretty boring outlook, right? Once again, then coming to the end of the year, right? Looking for an inside week and mean reversions. But do you guys have any questions nonetheless? As I said, I'm always open to talking about specific concepts whatsoever. Was wondering was the contract change on Friday? It was not. Okay, so the expiry that you'll see on the official CME website was on the 20th of December. But here, I haven't done a reminder of this in quite some time. So let me open my Google and I'll bring you guys over to bar chart, which is what I use for contract changes, right? I just need pretty much a reminder every time, but I'll try and make a note, perhaps some events of some sort, so that when contract change happen, I can help you guys out and you guys can see. Did you anticipate today's gap up based on Rice app? No, I do not use predictive direction for gaps. I don't personally think it's a valuable metric. I like to use the direction of the gap for specific filtering. So, for example, if I'm going to be looking at data for today, right, I only want to see gap ups. Why? Because I'm not interested in gap downs. That's a whole different thing. Currently, this week we gapped up. So if I'm going to be looking at valuable data, I'm going to be looking at the opening gaps analysis and filter them based on the direction of a gap up. Can you guys see my bar chart at the moment? Just to make sure. Should be my internet here. Awesome. You head over to bar chart, which is linked in official links, right under the tools section. You'll find it right there, a bar chart. And what do I do from here? Very simple. Right here, you can search for the symbol. I like to just go through select a commodity, and then I can just scroll down to indices. If you're trading futures, you definitely want this website just nonetheless. S&P and NASDAQ, same thing. But here, let's go on NASDAQ this time, feeling like it. And now you have access to all the contracts. So, of course, you have the cash contract, which is not interesting to us because this is not what we have access to. What we're interested in are the CMEs, right? So currently, we are looking at open interest for the specific contract. So now I just clicked on it. So as you can see, I can filter based on the highest open interest. But this is the contract I'm always going to be trading because it's the contract that has the most amount of money put in, right? So it has the most amount of liquidity, positions. This is where the algorithms will be active. So when we're nearing a contract change, now, of course, we just changed contract, so it's not even close of a difference. But when we're nearing contract change, you'll find that the current contract and the next contract are going to be quite close in open interest. And basically what I do is that every single morning, I open it just before I trade when we're in the contract change week, which, for example, was last week, right? Expiry was December, and we're always looking at an expiry near mid-month, which pretty much it's always the 15th, except for the December contract, which is 17th, 20th. That's pretty much it. You can find the official dates on the CME website directly. But every single morning before I trade, I open my bar chart, I look at the open interest, and I'm always interested in trading the one with the highest open interest. So when we're nearing contract change, people are taking their long-term positions out of the previous contract into the next contract, right? This is why we call it rollover. They're rolling their positions over. And when that switch happens, where now all of a sudden the new contract, which perhaps isn't even active technically since the previous one hasn't expired, has a higher open interest, well, that's where I switch my charts and I start trading the current contract, if I can say, the one with the highest open interest. So very straightforward stuff there, but that's how I personally that's how I personally use bar chart to define which contract I'm going to be changing and interact with contract change weeks like intraday, right? From a day-to-day perspective. Just to answer your question, Barraj, so now we gapped up, we do historical analysis and trade through the gap. Well, as I said, I didn't look at anything this week because I'm not going to be trading it, right? So for me, it's a slow week. It's an easy week. If you want to see more examples, definitely just go on my YouTube channel. Pretty much close to when we launched the app, I did do a lot of analysis, a lot of the sharing data directly in our price action reviews, which the app launched October 18th this year, by the way. So if you just scroll back and look at some a little older videos, right, 2 to 3 months old, you'll find a lot of referrals to data. Of course, you can always look at our posts directly on our Twitter, have a lot of examples. But if you want some more week-to-week examples, it's definitely going to go to after the holidays because I'm not going to be trading between then. So I don't want to entice myself to be trading by analyzing the charts, right? So you check every midweek of the month. What do you mean by that? You check every midweek of the month. Oh, not every midweek of the month. Every middle week of when a contract change is coming, right? So only when a contract change is coming. And if you look at the contract, you can tell by the name of it. So if I just type up NQ and click that little arrow, I see that the current contract is NQH with a March 2025 expiry. So when we are in March, on the middle week of March, right, I'm going to be looking at that open interest. Once again, the next time it will be June, which now I just clicked. But the next time after, I'm going to be looking at a June expiry. So the middle week of June, I'm going to be looking at my bar chart for the whole week until we flip. Once we switch and the new contract now has more open interest, I can be very confident that this one is going to remain in that way. Does that make sense? That's awesome to hear, Barach. Awesome. So yeah, I do like, honestly, it's really just that this week in December, I forgot about it. You can clearly tell from the announcement where I reminded it after the fact. But usually I like to do this little rundown on the week where there is a contract switch and talk about it in the price action reviews. I did in the price action reviews. I just forgot to do it in the weekly outlook, sadly, on this specific expiry. Honestly, it had completely slipped my mind. I was still trading NQM. So I placed a trade on NQM when I should have on NQH. Doesn't change much often, but that time that it stops you out, and on the new contract, which you should have been trading, it did not stop you out, you're going to be pissed that you didn't do it, right? So I'll definitely remind you guys the next time that comes around in March, because as you guys know, I'll still be here every single week, every single high impact news day. I'm out here giving you guys price action reviews and weekly outlooks. And that is not going anywhere. It is going to continue until I stop trading. Will it be gatekept at some point just for a private community? I'm not going to lie to you guys, that is in the works in the future. But you still have a good 2 or 3 years of free content before I go private. So enjoy it while it lasts, definitely. Do we have any final questions to close this off? I'm seeing Barach type, so I'm just going to give it a second there. Seems pretty straightforward, right? This week is not the best week to definitely do this. I do once in a while Barach, haven't had the time to do it, to be straightforward with you guys, but you can find the playlist public on my YouTube, where I did in the past host some live trading events here in the Discord, so definitely some content there as well. Thank you, Vishiro, or is it Vishro? I'm sorry if I'm mispronouncing, as always, but I wish you all the best of holidays. Really do enjoy it. Take some time off. Enjoy some time with your family. Definitely cherish those moments. And I wish you all a great week. If you are trading, good luck, definitely. And if not, we'll see each other back on tomorrow or Tuesday. You guys have some great holidays. Have a good night. Bye.